Today's top stories at NBR: medical cannabis firm looking to raise $2 million. Z Energy share price benefits from speculation, an increase of interest in green building practices. And there's more coming right up. Kia ora and welcome to NBR Today, a wrap of the day's top business stories from the authority in New Zealand business news since 1970, nbr.co.nz. It's Monday, August 9th. I'm Paul Brennan. Thanks so much for joining us. Auckland Airport has announced it will build a new $1 billion plus domestic hub facility attached to the eastern end of the existing international terminal. The NZX-listed company said preparation would begin early next year on the project to move jet flights arriving and departing via Auckland to major New Zealand towns and cities into a new domestic hub. The domestic hub will initially accommodate jet operations, aircraft flying to the main centres, while regional services would continue operating from the existing domestic terminal building and move across to the main terminal building later. The new domestic operation will be about 3 times the size of the current domestic terminal when accounting for shared kiosk-based check-in for both international and domestic travellers. The airport will also spend about $200 million on a new transport hub with upgraded pedestrian, transport links and car parking. Taranaki medical cannabis firm Greenfern Industries is looking to raise $2 million through crowdfunding platform Equitize ahead of a planned IPO on the NZX later this year. In an information memorandum attached to the crowdfunding profile, Greenfern said it was targeting wholesale investors to raise $2 million at $2 a share, with the ability to raise a further $1 million. The shares are priced the same as those in the company's $2.8 million capital raise to retail and wholesale investors in August 2020, despite the company reporting significant progress and development since then. There's been no independent valuation of the shares, and the minimum investment is $5,000. Z Energy's share price has benefited from speculation it's in potential suitors' sights. Shares in the dual-listed fuel retailer have so far eased off a Monday morning high of $3.19, although they're still up on their $3.05 opening. Today's share price movement, recently a source of concern for Z Energy's board, leadership team and shareholders, follows a Sunday report by The Australian that said attention has narrowed on global fuel trader Vitol and ASX-listed oil company Ampol as parties potentially keen on acquiring the Kiwi company. Comment has been sought from Vitol and Ampol. A Z Energy spokesperson said it wouldn't comment on market speculation, and the company continued to meet its disclosure obligations. Big Four audit firm Deloitte is exiting its existing premises at 80 Queen Street in Auckland in favour of NZX-listed Precinct Properties' 1 Queen Street project adjoining Commercial Bay. In a release to the market today, Precinct revealed Deloitte had signed a 20-year lease with naming rights for 7,500 square metres of office space across floors 15 to 20 of the $305 million 5 Green Star project. Precinct Chief Executive Scott Pritchard said securing a long-term commitment from a high-quality business such as Deloitte reflected the strong demand for prime inner-city office space. Looming climate-related financial disclosure has seen an increase of interest in green building practices, according to leading architectural firm Jasmax. The mandatory climate-related disclosures legislation will see about 200 entities, publicly listed companies, large insurers, banks, non-bank deposit takers and investment managers in New Zealand report on carbon emissions as soon as 2023. Multidisciplinary architecture firm Jasmax partner Nick Moyes said most of the big developers the firm worked with were already running through their climate-related disclosures as a test case. It's been sort of like a possum in the headlights, he said. Profit at Suncorp New Zealand, whose stable includes Vero Insurance, Asteron Life and AA Insurance, has been significantly impacted by a big spike in natural hazard claims, the insurance company said today. Suncorp NZ reported net profit after tax in the year to June 30 of $215 million, down 17% on the previous year. That also compared unfavourably against a strong 42% profit increase at Australian parent Suncorp Group, which recorded an overall net profit after tax of Australian $1.06 billion. Suncorp New Zealand Chief Executive Jimmy Higgins said the recent Auckland tornado, as well as floods in Napier, Northland and Canterbury, had significantly affected its profit. The full details of those stories and more are at nbr.co.nz right now. Tomorrow at NBR, in Margin Call, Bevan Graham argues inflation is here to stay, while the trendy world of social media features in this week's entrepreneur story on Wendy Thompson. I'm Paul Brennan. I look forward to being with you again tomorrow from around lunchtime for the morning's NBR trending stories. Then same time, same place, right here from 5:30 tomorrow for another NBR Today.